Hi, folks. Phil Soper, CEO of Royal LePage here. We've just completed some new market research that I think you might find interesting. The Bank of Canada has ended its aggressive interest rate increase program, put in place, of course, to combat inflation. And we wanted to know how that had changed Canadians' attitudes towards buying or selling a home. So stepping back a second, the first thing we asked is, how many of you were in market? How many people were interested in buying or selling a home? And the answer was 24%. We then said, okay, of the quarter of Canadians who were potentially in the housing market, how impactful was the Bank of Canada's aggressive interest rate increasing policy? Did rising rates make you change your mind? And the answer was overwhelmingly yes. And 93% of Canadians were either strongly or moderately impacted by the bank's decision. And this makes sense because we see volumes down 40%, the number of homes trading hands year over year from those pandemic peaks, down 40%. So a lot of people were either more cautious or they backed out of the market altogether. But here's where we are today, the most interesting part of this research. What happens now that rates are stabilized? Do people get back into the market? Well, the answer is yes. A full quarter of people who were in the market are back into the market now, the spring of 2023. If you add the people that say, yes, I'm eager to get back, but I want to see what the Bank of Canada does next month when they review interest rates. So if you add the people that are going to wait one or several interest rate decision meetings from the bank before they really call it the more conservative folks, we're up to 58%. So 6 in 10 of those people who were intending to be in the market, the push to the sidelines, are now re-entering the market in 2023. 25% of people have said, no, I've changed my mind. I'm not going to be buying or selling a home during this period. And that's either because they can't afford a home with higher interest rates, or they just feel uncomfortable during these admittedly tumultuous times. The last little bit of research out of this I found interesting as well. And it speaks to the mortgage products that people are interested in. And it's surprising to me, but not when I step back and think about it. The majority of people, we're talking about 70% of Canadians, are looking at a fixed interest rate product. Now, over the long term, fixed interest rate products, the 5-year fixed is the most popular mortgage that people pick up in Canada. But that's over the long term with low inflation and call it the lack of variability that we've had during the pandemic and post-pandemic. We're at a peak, or at least a near peak, in interest rate, the cost of borrowing right now. Yet 53% of people want to lock into a long-term mortgage. So I've said this previously. I think it's really important for people to put the cycle, the economic cycle, in context when they're making their personal financial plans. Talk to your advisor, talk to your realtor, talk to your mortgage specialist before you lock into long-term rates at a time when interest rates have peaked and are likely falling. Okay? One last comment. We've had some additional turmoil through the failure of a couple of American banks. One, Silicon Valley Bank, was the second largest bank failure in American financial history. So this is significant stuff. How might that impact housing markets? Well, paradoxically, it could actually help housing markets. And here's why. The Federal Reserve, the American central bank, was engaged in an aggressive period of interest rate increases. And they were not over. Unlike the Bank of Canada that said, yeah, we've done our job, we're happy with where we're at. Inflation's higher in the US and they were going to continue. But I believe these cracks we've seen in the American financial system will make them pause. We may see a small 25 basis point increase from the Federal Reserve, but I doubt they're going to pursue aggressive interest rate increases when the banking system is clearly showing significant stress. Therefore, a U.S. bank failure could actually be positive news for housing on a continental level. Hope you found this useful.